Hi, this is BloombergQuint. I'm Menaka Doshi, and of course, we're talking about the key takeaways from the Union Budget 2022, which the Finance Minister presented just a short while ago. I'm joined by TV Narendran, the head of Tata Steel, is also the head of CII. Mr. Narendran, thank you very much for joining us here on BloombergQuint. I would imagine that your spirits and the spirits of many across India Inc. Were boosted when the Finance Minister underscored her emphasis on capital expenditure and a budget led by capital expenditure.
Absolutely, Menaka. Thanks for having me on the show. I think this has been a big ask of CII to the government to continue to stay focused on infrastructure. And I think the government has not only done that, but enhanced the expenditure. And I think that's great because we are at a time when private sector investment is just about starting to happen. And I think the government needs to support the public sector investment or the government investment in infrastructure to, as the finance minister herself said, crowd in the private investment. And I think she said it for that and set it up well for that. And I think now the onus is on the private sector to, get the investments going.
You mentioned, Mr. Narendran, that you're already seeing signs of some return to capital investment by the private sector. Can you elaborate a little bit more on that and take us through how you think these two could run complementarily?
Yeah. Menaka, what happens with private sector is investments come back when demand is strong, capacity utilization improves, profitability is good, and balance sheets are repaired. And I think we've had all those conditions come in for many sectors, capital-intensive sectors like metals, for instance, has suffered from that for most of the last decade. So we are seeing, for instance, the steel companies announcing a lot of investments because it fulfills all the conditions that I have just described. We are seeing chemicals is also another area where there's investment coming in. And if you really look at private sector investment of 10 years back, largely three sectors drove it. One is metals, two is chemicals, and three is power. Now, power has changed in the last 10 years, right? You're not building thermal power plants anymore. It's more investment in green energy, which is a different nature of private sector investment. So I think the capital intensive sectors who are investing 10 years back, at least 2 out of the 3 of them are coming back in a strong way, which augurs well. And then you'll have the others following. The only sector which you are waiting to see more recovery is the automobile industry, because they've been plagued not so much by demand, but by semiconductor issues, at least the passenger cars. Once that demand comes back, you will see more investments in automobile and more importantly in the auto value chain.
How do you see the breakup of the capital expenditure to the extent that the finance minister has shared in her speech and in the details? I think there is the continuation of support to the lower income housing scheme, as well as the tap in every home or Har Ghar Mein Nal scheme. Equally, I think she emphasized about 20,000 crores on roads, if I read that correctly, and then cargo terminals, and a variety of other smaller projects in the logistics space under the PM Gati Shakti program. Now, sort of how does this full picture come together for you? And I don't mean that just from a steel demand point of view, but how does this help crowd in private sector investment?
If you really look at the capital expenditure, I think the biggest part of it is going to the railways and to road building, right? Now, both these are hugely important when you look at the cost of doing business. The logistics cost in India is about 14-15% of GDP. Most developed countries or developing countries who have efficient logistics systems have 6 to 8% as logistics cost as percentage of GDP. And this has a huge impact on big companies, small companies, everyone, right? So I think when you look at driving competitiveness in India, there is some element of competitiveness which industries can take care of, which is within their factory gate, so to speak. I'm talking in the context of manufacturing. But a lot of that competitiveness gets eroded outside the factory gate. And I think these investments help address that in a big way, in addition to creating demand for products like cement and steel and everything else. The second part is the rural infrastructure. I think, again, when you look at rural infrastructure, there is a physical infrastructure and the digital infrastructure. And the finance minister talked about both, because that's important to drive inclusion. That's important to improve the connectivity. So as much as the roads are important, the optical fibers are also important. Electricity is important. Water supply is important, because clean water supply has a huge impact on health outcomes in rural India and elsewhere as well. Right. So I think there is a little bit of a broader based approach to addressing some of these issues. Slightly longer term issues are getting addressed. And every year we see progress, whether it's in housing, the Prime Minister's scheme, or the Water for All, which is, I think, an extremely important initiative. So I think across the board, it's not just focusing on one head of expenditure or the other. I think across the board, there is a focus on building both the digital and physical infrastructure, which I think is very important for the country.
My next question, Mr. Narendran, is a twofold question. One is that, yes, it's great that we are focused on the capital expenditure route to crowd in private investment. But the gestation period or the execution period of this is the most challenging part. It's much easier to make the announcement than get the work done, on the ground. And we've seen lags in previous years in this in a big way, right? We've also seen a case of dues, of arbitration and money stuck in those situations. So I want you to explain to me, by when do you see some of the benefits of this kicking in? How does one understand that? And that's part one of my question. The corollary to this is, if the benefits are going to take at least a year and a half, or maybe even two, as is evident in infrastructure, what happens to the need to boost demand and incomes immediately, given the considerable impact the pandemic's had over the last 2 years on certain income classes and also on consumption across the board?
Yeah. No, Menaka, I think it's a very, very complex situation, right? I mean, so one is, like I said, some sectors have already announced investment plans, including the company I represent. So there's a lot going on there. But having said that, private sector investment doesn't necessarily mean enough private sector jobs, right? Because capital intensive segments create some jobs, but not as many jobs as you would like to have, right? So for that, you do need construction. And that's why I think infrastructure spend creates jobs in construction, which is more immediate, right? Private sector investments in manufacturing creates higher skill jobs, because the quality of jobs in the factories today are very different from the quality of jobs in the factories 20 years back or 30 years back. And they're higher paying jobs, more highly skilled jobs, right? So that's important. But at the same time, and I think some of the initiatives of the government are addressed to that, the job creating sectors are the high contact sectors, your restaurants, your hospitality, tourism. A lot of it has been significantly impacted by the pandemic. I think the extension of the credit guarantee scheme, enhancement of its outlay, etc., I think is good, right? So that's very important. We also need to look at labor-intensive manufacturing, like textiles. So I'm happy to see textile exports is going up. We need to move a long way. The other area is electronics manufacturing. I think the PLI schemes and the policies have been good, and I think India is seeing a lot of investments come in electronics manufacturing, because that again is very employment intensive. So you need to have employment intensive private sector investment, capital intensive private sector investment, because each has its own value. Till the interim, you need the construction spends, because that takes care of a lot of jobs between agriculture and high-end manufacturing or services. And then you need the services sector to come back, particularly those which have been impacted. So I think there are multiple actions to be taken, but till the jobs come back, or the sentiments on jobs comes back, and the income start growing, and the expenditures on health, which people have spent more on than they normally do, go down, consumption will always be a bit fragile. That's why we feel the investment focus should be there. At the same time, we need to nurture consumption back to normal levels.
I know companies like yours have been in investment phase for a while now, right? From the time when you were acquiring assets, even through IBC. So, but are you seeing the second level investments come in of, let's say, consumer goods companies adding greenfield capacity, and things like that?
I think the biggest area where we've seen investments is one is in electronics manufacturing. Mm-hmm. You see a lot of announcements happening, and India was the biggest importer of mobile phones in the world. India is going to become an exporter of mobile phones very quickly, I think, if it isn't already. The other area where we're seeing a lot of investments is logistics, supply chains, because with e-commerce, supply chains need to reach to all parts of the country. Warehousing systems, logistics systems, etc., need to reach out to all parts of the country. The government has also talked about logistics parks and things like that. So I think all these are areas where we are seeing investments coming in. Of course, healthcare is another area. I've not seen the numbers yet. Of course, I understand the money kept aside is not much higher than what it was for last year. But one needs to see whether the last year's money, how much of it was spent on vaccines. And because some of those are one-time expenses or not ongoing expenses, how much of it can be spent on infrastructure? Because we also need to build medical devices and many other things in India. Why should we be importing a lot of the components? And the finance minister also talked about the capital goods industry. I think that's extremely important. A lot of money which is spent on investments in India flows out of the country for capital goods. We need to see how to preserve that in the country. So I think there are a lot of opportunities beyond some of the traditional sectors. And I think some of the policies that the government has in place is directed towards that.
Were you disappointed that the services sector got an almost miss by the government?
Well, I think there was, like I said, a focus on the credit guarantee scheme for MSMEs in the high contact sector. So that's positive. Some incentives for startups, which a lot of them are in some sense services. But otherwise, yeah, I would have liked to see a little bit more on tourism. There was some announcement on ropeways, etc. But I think maybe this is not the right time. Maybe next year's budget, when travel is back to normal, India has huge potential to get more tourists in. I think this year hotels have survived because of domestic tourism. But I think there's a huge opportunity for us because it's, again, a sector which is a big employment generator, and India does have the ingredients to become a very, very important tourist destination.
A final point, Mr. Narendran, and this has to do with the increase we've seen in bond yields today on account of both the fiscal deficit number and therefore the subsequent borrowing number that has come through for this year, next, more importantly for next. What's your finance team telling you about how concerned they are about what this might mean for financing costs in the next 6 to 12 months?
Yeah, so obviously, in some sense, this was inevitable, right? It was, we had, I think, 4 years of a time when interest rates only going down or close to zero. So companies like us, or many like us, have deleveraged. We brought down debt, so we are better prepared to deal with the rise in bond yields than we would have been maybe 3 or 4 years back. Right? So I think to that extent, companies have been prudent, have been thinking about it. And I don't think this time we are seeing the kind of investment cycle in commodities that we saw in 2007, 2008, when commodity prices were high. Right? So this time it's been far more prudent. Of course, countries like India, where the demand is growing, there are investments, but nobody is building steel plants across the world. Right? So to me, there is far more, I would say, prudence in capital expenditure across the world. People are aware that interest rates are going to go up. And I think in India, we are in a slightly different position because you have a domestic demand, which could be positive. And if you have deleveraged balance sheets and demand growth, then you're in a good position maybe to invest from your own cash flow.
All right, Mr. Narendran, I appreciate you finding the time to speak with us here at BloombergQuint. Thank you very much for your quick thoughts on the budget this day.
Thank you, Meena.